Today I'll be going over my top 5 holdings in my personal portfolio. Now I know on my channel I post Robinhood portfolio video updates all the time because I want to show you guys what current stocks I'm owning and really just how my portfolio is doing over time and things like that, to sort of show you that I know a little bit about what I'm talking about and show where my ups are, my downs are, you know, just all that kind of stuff. So definitely check out those videos if you're interested in seeing the entire portfolio. I literally scroll through it on the Robinhood app, but in this video I'm going to go a little bit more in depth about my top 5 holdings. So I'm just going to list them off for you and list off their percentages if that's all you're here for. So the first stock is Apple, AAPL. I have 12.76% of them. They're my largest holding right now. I would definitely feel comfortable with a little bit more of them in my portfolio. Next is Boeing at 6.92%. After that is Netflix at 6.52%. After that is Microsoft at 6.32%, and then coming in at number 5 is Johnson & Johnson at 5.40%. And then actually after that, my 6th highest stock, but actually I should just say holding because it's actually an ETF, is Vanguard S&P 500 ETF. So those are my top 5 holdings right there. I'm going to talk a little bit about each individual stock and a little bit about why I own it, why I have it at such high weight, just really go into it a little bit more than that. So I'm going to start from 5 and make my way up. So the first one, or the 5th one I should say, actually is Johnson & Johnson. And Johnson & Johnson, if you follow my channel at all, it's really like a stock that you'd probably say is like right up my alley. If we look at how they've performed over the past year or so, they were on quite a significant dip, and that's actually why they're at the number 5 stock in my portfolio right now, or else they'd probably be a whole lot lower. I like to buy stocks on dips. I like to buy blue chip, low value stocks on dips as well. And I also like to hold dividend stocks, and Johnson & Johnson, when you're talking about dividend stocks, is at like the high end of the list. And one other thing I like to have in my portfolio is I like to have a diversified set of stocks from different sectors, different market cap weights, things like that. And Johnson & Johnson, pretty large market cap, healthcare sector stock that is not risky. There's a lot of healthcare sector stocks out there, that biopharmaceutical companies that are very, very risky. They're high risk, high reward type stocks. I don't like investing in companies like that. I like investing in companies that have very routine profits, really routine revenue. They're just a consistent company overall. And Johnson & Johnson, I think, fits that bill very well. So if you're looking for a stock that's in the healthcare sector that's a little bit more safer or less risky, I really personally like Johnson & Johnson a lot, and they actually are like going back up right now, which is really great. That's kind of what I was expecting to soon. I definitely could see them going towards the $140 range in the next few months or so. But anyways, moving on to the next stock is Microsoft, and I know my top 5 is very tech weighted, but the rest of my portfolio, I guess, isn't necessarily as tech weighted, but Microsoft is one of those tech stocks that I would definitely feel comfortable holding a significant portion of that in my portfolio. Right now it's only at 6%, which is totally okay. I shouldn't say my only problem with tech stocks, but one problem I have with them is that it's definitely difficult to determine a buy-in point with those kind of stocks. Like a stock like Microsoft that's up 250% in the past 5 years, if you look at their 5-year chart, it's pretty much just all green. They've done nothing, pretty much would go up for the most part. So it is definitely difficult to buy into a stock like that, especially when someone like me, I wait for like a big dip on them, like stocks that recently dipped, like Facebook, like Netflix, Twitter recently dipped, like so those kind of tech stocks, they have dips. They're a little bit more volatile than one like this, but Microsoft, they just crank out consistent earnings. They crank out, everything across the board really is green in my opinion. They have diversified revenue streams. They're not like certain tech companies out there that really rely on like advertisements like Facebook or Google, or like Amazon just solely on e-commerce. Like if you look at Microsoft's how they make money, actually, they have a bunch of different platforms, from cloud to AI to actual product sales to things like business, I don't know what you want to call it, business software programs, things like that. And they were kind of on the monthly payment thing way before other companies were, in terms of like online software and stuff like that. They were literally on it like 10-20 years before other companies were. And I think a lot of people almost like shut a blind eye to how well Microsoft is doing, just because they're just kind of always a top dog in that aspect. But anyways, Microsoft right now, also one of my better earning stocks. They have a little bit high PE ratio right now, around 50. Once again, like I said, kind of hard to buy into a stock like this because there's not a whole lot of dips on them. 1.7 PE ratio according to Robinhood, or excuse me, 1.7 dividend yield according to Robinhood, and Microsoft definitely has a bit of room to increase that, and I think they will continue to do so. Wouldn't be surprised if they're a dividend aristocrat. I actually don't know off the top of my head how many years they've been increasing it, but I would not be surprised if they aren't one somewhat soon. Next on the list, coming in at number 3, is Netflix. And one thing to note about Netflix, their share price is $330 right now. So all these stocks on this list are a little bit more, I should say, I guess their share prices are a little bit higher than other stocks in my portfolio. So for example, a stock like Netflix compared to a stock like Twitter, where the stock price is around $30 or so, it's a little bit harder to weight these stocks. A stock like Netflix, especially if you have a smaller portfolio, like me, if it's only in the thousands of dollars range, if it's under like $25,000, it's hard to own a whole lot of shares of a stock like this because the price is actually so high. And a couple things about Netflix, they recently didn't have necessarily a great earnings report. I don't think that was like a horrible thing. I don't think it was nearly as tragic as a lot of people made it out to be. Once again, or I shouldn't say once again, recently Trump has been talking about getting rid of earnings reports, kind of having the SEC look it over, see if they should, companies should stop doing that. And I do understand that for reasons like this. Netflix's earnings report actually wasn't that bad. If you had looked at it, not with wanting to sell the stock, it actually was pretty decent. And even if Netflix stayed at relatively similar numbers to they are right now in terms of user growth, subscriber growth, revenue, things like that, they'd actually still be doing pretty good, and they'd still be a company that's making a whole lot of money. But Netflix is definitely more of a growth-oriented stock in my portfolio. I think I have a fairly distributed range of them, but I definitely have more blue chip, like dividend-yielding stocks. I do growth stocks in my portfolio, but Netflix is one of those that has been a great grower for me. They still have been monstrous, and I still actually think they're the best growth stock in my portfolio, even though they have been dipping quite a bit of recent. The past 3 months they're down only 1%, but for Netflix that is pretty rare. Next on the list is going to be Boeing. And Boeing is, I guess I kind of want to say the odd one out of this group of stocks because it's not tech oriented in any sort of way besides Johnson & Johnson, obviously. It's a stock that I have always really talked quite fondly of. It's one I feel like a lot of people don't talk a lot about because it's one of those stocks, it's almost in like the blue chip range. That's a company that performs very well. They have great consistent profits, but they were also like almost secretly a growth stock. I feel like, I'm in the investing world. I talk about investing a lot. People talk about growth stocks. I feel like they almost ignore Boeing. I feel like they don't talk about them as much as they should, but they're definitely a company that has performed very, very well, especially over the past year or so, especially when I bought them. I got them at like a killer price. I got them at like $200. They're at $350 right now. I've been doing very well on Boeing. Great PE ratio, 20 PE ratio, almost 2% dividend yield. Definitely have room to increase that. $200 billion company. They have been doing very, very well. All their earnings reports are great. That dividend yield is nice as well. Really solid company in my opinion. Now, coming in at number 1 is Apple. And Apple, like always, I talk a lot about Apple. I'm really fond of them, really one of my favorite stocks. A lot of people, I shouldn't say ask top 3. I guess a lot of people on my channel, they'll be like, hey, what's your favorite stock? What's your best stock to invest in? And whenever people ask me my favorite stock or just kind of like a really good beginner stock, if they have like a few $1,000s to put in the market, I always say Apple is my favorite stock by far. And it obviously is a lot of people's favorite stocks. It's Warren Buffett's favorite stock. He said before he would own 100% of the company if he could, but he only owns like 5%. And when I say only own, this is literally a $1 trillion company, so that is a pretty significant amount. But Apple, it's crazy to see a stock like that be at $1 trillion market cap, but only have a PE ratio of 19. It's well over $200 now. It's a company that just cranks out profits. And one thing that the analysts or experts used to say, they were a little late on Apple that I was like way ahead of. It was months and months ago if you've been following my channel, and recently people have started to realize this. When I look at companies' earnings reports, especially a company like Apple, I sort of look at where their money's coming from, and Apple's biggest sales driver was from the iPhone. And a lot of critics of Apple said that if iPhone sales were to go down even just a little bit, Apple would probably perform pretty poorly. But one thing they sort of overlooked is in Apple's earnings reports, they show which products are selling the most, which products and services are selling the best. And with Apple, they have iPhone at the top by far, and then they have things like MacBook, iPads. Then they had this little other category that sort of entailed a whole lot of things. Now they actually separated watches to a wearable category, but beforehand, like a while back, they had an other category that included things like the Apple Watch, the AirPods, their services, and it turned out that category was growing slowly, and it's starting to grow more. So really the only one critique anyone could probably ever have of Apple was that their iPhone sales fell, the whole company would fall, and they would could possibly start to not be growing as strong as they have. But none of those numbers really fell too much. iPhone sales weren't as great as people had expected them to, but they still were very good. And really everything about Apple across the board is very, very great. It's a company I would definitely feel comfortable holding 15 to 20% in my portfolio. And a lot of people think since Apple's been at all-time highs that their PE ratio is going to be super high and they're going to be at a high valuation, but they're actually at a pretty fair one in my opinion right now. I mean, they got a PE ratio about 20 right now. You really can't go wrong with a company like that. But other than that, guys, that's it for this video. Those are my top 5 holdings. I want to discuss about them a little bit more in depth and than I do in just my portfolio overview videos because I have to go over like 30 stocks, so I don't want to make the video like an hour long. But other than that, guys, I hope you enjoyed the video, and if you did, definitely leave a comment below what you think of my portfolio and maybe perhaps the top holdings in your portfolio as well. And a couple other things to note, definitely pay attention to that community tab. I've been talking about other things I've been doing, like I'm talking about like my Instagram, possibly adding a Snapchat, and I also think I'm going to be adding a blog somewhat soon. So if you're interested in writing or rather read rather than watch videos, definitely stay tuned for that. But other than that, guys, thanks for watching.